What is going on, guys? This is Andrew O'Connell with Pristine Capital coming at you with your end of day recap. What a crazy day it was. Let's take a look at what happened today. So, to kickstart it, we had this crazy gap up last night. Futures were up at 1.5%, all the way up to about 2%. Like, these indices were completely in full rippy mode last night. It turned out that Pfizer came through with some positive vaccine data, which really set the stage for this monster rally that we had today. So you can take a look really where we ended up. SPY up 1.26%. We had the Qs, which are very tech heavy, up or down 2.04%. We had the small caps, the Russell up 3.62%, and we had the Dow Jones up 3%. So if we think about what this vaccine really means, it is that the vaccine has a 90% effective rate, which is apparently very high compared to what they were expecting, and they would have actually accepted a lot lower of an effective rate. So I guess that was some positive news, and it really got the cyclicals, the cruisers, the airlines, all of those spaces, and I happen to be long a bunch of those for today. So today was an awesome day for me. But those cyclicals really stood out in a major way. And then the tech stocks got completely destroyed. Because there's a lot of people that have been piling into these tech stocks literally since March. So you have about, 7-8 months of people just piling into tech every single day. So one of the things that I wanted to address is, I was seeing a lot of people. My goals for today were to come in, don't sell my value stocks just because they're up a lot. At the same time, don't look for the first sign of a dip in tech and just pounce all over it. Really, for me, it was like, okay, we have this big gap. I'm going to be observing for most of the day, not making any rash decisions, and see what the price action tells me. I saw a lot of people on Twitter that, and this is something that like a newer trader would do. Like, this is something that I certainly used to do. People start going down the full logical chain, and they'll be like, for instance, like, let's take a look. We're going to jump around a little bit. But I just want to talk about this point. So like something like a Norwegian Cruise Lines, I have this timestamped on Twitter that I've been long calls for March in Norwegian. And people will see that the stock, it was up huge today. It was up 26.75%. People will start saying things like, well, the vaccine, it's not really going to be out yet until mid-2021, and it's going to be hard to get the vaccine out to everyone, and it's going to take a while. So, this rally in the cyclicals, it's completely irrational. And, nobody's going to stop using their tech just because COVID's over. So, any dip in these stocks is a buy. But really the problem with that logic is that, and it's very common sense, the market is looking into the future. So like, for instance, companies like Norwegian, companies like Royal Caribbean, the airline stocks, some long Cheesecake Factory as well, a lot of these have literally been priced almost for bankruptcy. And really, they've been priced as a business that has no revenue. So even just the prospect of like, okay, we know where the revenue is going to be coming from in the future, things of that nature, the stocks are going to move now. The stocks, they're not going to wait until the revenue starts flooding in and everything is back to normal to move. Same thing like with the tech stocks. You can take a look at some of these, like we'll take a look at Zoom, which is like the poster child for the stay-at-home stocks. Something like this, people are going like, oh, well, Zoom, it's down 17%. This is one of the best stocks. Like, I have to buy. Like, it's so cheap here. But really, the fact of the matter is Zoom had been rallying for, months and months and months. And this stock, tripled, quadrupled, whatever you want to call it. So even though it's like, okay, it's cheap compared to where it was yesterday, this stock had gotten very expensive because for a while it was the COVID forever plays, where you had months and months of people piling in because there were no other good prospects to invest in. So especially with these high flyers where the valuations are literally at nosebleed levels, it's not enough to just say like, oh, okay, they're cheaper than they were yesterday, let's buy. You want to be patient. And I've fallen victim to this as well. Like, you try to catch the falling knife, it doesn't work out, and you end up having a big loser on your hands. So that was something I definitely wanted to avoid today. So let's take a look at the headline indices. I'll take a look at ES. Sure enough, this really ended up just being a massive fade throughout the day. So you can see, we gapped up, or we gapped up here. We ran all the way to 3,668, and we hit that R1 target, surpassed it, but really throughout the rest of the day, we were just fading. So this was definitely, like, for instance, on Twitter, everybody got bearish on Twitter and claimed, I remember I ran a poll on this, and there were only like 23% of people on Twitter that were fully invested down here, which is where you should have been getting very long in hindsight. And I've been posting about that, so that's not just hindsight analysis. But sure enough, this rally happened so fast. And look at this. It's really like 1, 2, 3, 4, 5. We'll call this 6. 7 trading days consecutively where we're just ripping higher. So at this point, it makes sense. If you were getting long into the teeth of this sell-off, there were a lot of players out there that were taking profits, which makes a lot of sense. So let's take a look. We'll see how IWM did. And then we'll go into some of the individual sectors that, were strong performers, poor performers, etc. So if we take a look at IWM, I was long calls at one point. I got shaken out like somewhere around here, to be honest, where I had, a decent profit, ended up getting moved out of it. But anyway, these levels, had been key for a while. So like we have this 170 target level, move through the area, and really we had this massive gap up, and this one didn't even run throughout the day. IWM was just a trend down day. So this one, great run, but you can clearly tell, up at these levels, there weren't many people that were interested in buying up there. So like, let's take a look at the actual market profile for IWM. It's kind of getting a little bit in the weeds. We'll see if this loads up. Sometimes it takes a while to get going. I have to restart my platform. This toss is kind of suspect sometimes. All right, taking a while. We'll see about that one. But basically, all I illustrate was that people aren't finding value up here. Let's be honest. Like, this is trading up outside the upper Bollinger Band. Like, clearly, it was weak throughout the day. Now let's take a look at the Qs. The Qs were pretty weak. And we had this downtrend right here. This is where we were completely melting into the election. And then, a couple of very powerful days with a lot of gaps in here. And that's, what you really want to be worried about when you're an active trader, those insane gaps. So we really, we touched that upper Bollinger Band, and we fell throughout the day. So I ended up adding, I timestamped this as well. I added some puts on the Qs into the close, because if you take a look at some of the other times when it's completely fallen apart, here we were riding the upper Bollinger Band for a while. So this was, like a very bullish sequence. But you can see here, we failed at the upper Bollinger Band. You have a big red candle and, further weakness. This is like a small downtrend. Same thing here. We even broke outside of the upper Bollinger Band. But sure enough, once you get that big red candle that takes you down from that Bollinger Band and you start that move down, typically we've been seeing that further weakness follows. So like here, we touched the upper Bollinger Band. We're getting that follow through. I would not be surprised if we explore this value area again. So yeah, we'll see how that progresses. Another one that I did take off today was, let's see, I believe I have this charted out in TrendSpider. I'll show you guys. So coming into today, I had Cheesecake Factory, I had Royal Caribbean, I had Norwegian Cruises, and then I had United Airlines. So let's take a look. Yeah, I have this one on TrendSpider over here. Or no, it wasn't United. I always get them confused. Southwest is the one that I've been playing. Yeah, okay. So Southwest, and this I have this mapped out on the weekly chart. So let's see. So if you take a look, this was the setup that I had in mind for a while, and that's really what got me into my Southwest calls. So I wrote here, and I posted this on Twitter as well. Love is forming an ascending triangle pattern on the weekly chart consisting of higher lows and equal highs. If the key support level at 39.68 breaks, I see about 22% of upside potential. So that was really, you can see I drew out here this ascending triangle. That setup triggered right here for me. And sure enough, I entered my calls, drew down a little bit over here, but we got this nice gap up, and I labeled this, or shoot, I don't know why I did that. But yeah, this I labeled as basically like a volume air pocket where you can see there's not much trading that's happened in this area. So basically we hit my target. I honestly should have taken it off right around here, but I never set the alert for the target, which I totally should have. It ended up fading throughout the day, and I just decided to take my profits, because when I'm looking at this right here, I see the airlines like Southwest. I believe this is one of the higher quality airlines, but it's pretty darn close to the all-time highs, essentially, like the pre-COVID highs. And the airlines are not good businesses. They never were, even to begin with. So I am certainly not hoping to ride this thing all the way to the all-time high, back to the pre-COVID highs, and beyond. This is one where I was just in it for a quick move, a quick explosive move. I have my other cyclicals, so I just decided to exit this one. And then we can take a look at some of the strong performers today. The cannabis stocks have been crushing it. Look at this monthly performance. It's pretty awesome. Those took a break today. They also had a pretty big, just bearish candle. I have my calls on for March. So those I'm leaving on. If I was super short term with it, I probably would have taken them off, last trading day or early today. But for these, they expire in May. I am willing to go through some ups and downs and upper Bollinger Band, lower Bollinger Band. I do just think that in a couple months, this cannabis ETF is probably going to be higher than it is today as legalization continues. We had the regional banks absolutely on fire. Look at that, up 15%. That's ridiculous. And we had global autos, the European financials. I would love to short that on the backside of this move. And then some of the weaker ones for today, it was really tech focused. Where, let's see, the FinTech ETF. Oh, it looks like the Chinese tech took a break. Next generation internet, innovative tech. So yeah, basically, gold miners, I don't know why those got crushed so much. But yeah, it was basically a day where the innovative tech companies and really the market leaders were giving some back. So what I would like to do, and I've pretty much been doing this on every corrective move, is I load up on value stocks, when they're towards the lower end of their Bollinger Band. And then as they get super overbought, like they are now, that's when I start to unload them. So I try to do that. And then as these high flyers are correcting, that's when I try to load up on them as well. So like you can see Melly had just horrific day. Zoom as well, we already went into. Chewy, which is one of my favorites. Chewy also had a pretty horrific day. Yeah, it held value, but still, horrific day. So a lot of these, it was just a tough day for these, which is fine. This COVID forever trade, COVID's not going to be forever, so it makes sense that they're giving some back. And then if we take a look at the style factors that did well, you can clearly see high beta. The high beta style factor ETF crushed it, up 11%. Cyclicals crushing it, and really the ones that gave a lot back were Momentum, had a tough day, International Momentum, Growth. Yeah, but even those, like the headline sector ETFs, didn't really do that bad. But some of the individual names within those spaces got absolutely taken to the woodshed. So that's really a little roundup. I took off some long exposure, added the QQQ hedges, really just in case. Hopefully those hedges don't make me any money and we just continue to rip. But another thing that I want to show you guys, another reason why I added the hedges, was if you take a look at SPY. And this one, obviously like very ugly candle. If we have these Bollinger Bands on, then we'll add more. Sometimes I like taking a look at the 3 standard deviation bands as well. So if we look, price went all the way up to the 3rd standard deviation mark. Pretty much tagged it. And then we fell off. And look at the prior high in September. Basically, we had something very similar where we tagged the 3 standard deviation Bollinger Band and we started falling through it. So typically, it is a good spot to take profits once you start getting to that 3rd standard deviation Bollinger Band. So let's see. Normally we don't even really get there. Yeah, so when you hit that 3rd standard deviation band, that is just very extreme. So that's definitely, some emotional buyers coming in, people that weren't long, that were desperate to get in, and they basically got their faces ripped off, anybody that bought up here. So moving forward, I'm going to be looking for some dips in some of these high flyers like apps. This is one I did a fundamental write-up on. I really, really like this stock. And I think it's awesome that it is pulling back. I cannot wait. I would love to get this one. In the 20s would be amazing. So I'll be looking for some of these. But that's really the end of day recap. I'm going to keep doing these as much as I can. And, maybe next time we can walk through some of the order flow as well. But thanks for checking me out. And happy trading.